Today is Monday, July 31st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grain markets this morning, Mark, with last week's extreme heat across the nation's midsection, why hasn't corn been able to perform better than it has?
Well, I think an improved weather outlook isn't helping, but I also think a large part of it is demand, or more specifically, the lack of export demand. Last week's extreme heat will likely result in crop ratings slipping 2 to 3% this afternoon's report. However, I'm not sure that's going to be enough to cause yield expectations to fall below 170 bushels per acre. Right now, my guess is the market is discounting an average yield of 173 to 174, and that's down from the July USDA forecast of 177.5. This reduction would drop production around 400 million bushels from the July forecast, and I think that could be easily absorbed through lower demand. As a result, ending stocks staying at or above 2 billion bushels. So, with the lower production and added cost of getting Ukraine's corn into the global marketplace, that so far has not stimulated a pickup in U.S. demand. New crop export commitments are at a 4-year low, and they're down 36% from a year ago, with Brazilian supplies still cheaper looking out into the October-November timeframe. So to me, corn is seeking out a price level where it could be more competitive in the global marketplace, which could very well mean prices back below the $5 level, or we see a more significant rebound in prices in Brazil.
You mentioned Brazil, Mark. Can you give us an update on those crops, the Brazilian crops?
Yeah, the second corn crop harvest is just past the halfway point, 55%. That's still well below a year ago pace of 75%. Yields are coming in strong. I'd expect another 1 to 2 million metric ton increase in their already record production. That from the USDA estimate in August, they're already at 133 million metric tons. This year's soybean harvest, it's long been complete with production at a record of 156 million metric tons. So the focus is starting to shift new crop plantings, which do begin here in about 6-7 weeks. Most estimates right now are for a 2 to 4% expansion in acres. USDA right now is forecasting a record crop of 163 million metric tons. Some private estimates now are already as high as over 170 million metric tons.
Lastly, Mark, let's touch on the wheat market. What are your thoughts on U.S. wheat production?
Well, winter wheat harvest is starting to wind down. I think this afternoon's report is going to show harvest of right around 75%, and that's behind the historical average. With a late season surge in crop conditions and reduction in drought in the southern plains, I look for higher production estimates from the USDA in August. My estimate is 1.230 billion bushels, and that's 24 million bushels above the USDA estimate in July. And I think just the opposite here for U.S. spring wheat. Drought conditions have continued to expand across the northern plains here in the U.S. My estimate for spring wheat, I'm cutting that 15 million bushels from the USDA estimate in July, and my forecast is at 464 million bushels.
Thanks, Mark. Alan, turning toward the financial markets, what are the most market-moving economic reports this week?
Okay, well, first of all, tomorrow we'll have the July Purchasing Managers Index final, and that's guessed at 49. Also, we'll have the July Institute for Supply Management Manufacturing Index anticipated to be 46.5. And then the June JOLTS report, that's job openings and labor turnover survey, anticipated to be 9.65 million. Then on Wednesday, the July ADP employment report predicted to be up 185,000. Thursday, the July Purchasing Managers Index composite predicted to be 52.4, and June factory orders estimated to be up 1.7%. And then finally, on Friday, we'll have probably the most important reports of the week. July non-farm payrolls expected to be up 200,000, and the unemployment rate likely to be unchanged at 3.6%.
Alan, what's the prospect of further rate increases over the next few months and into the Q1 of 2024?
Well, as far as the global central banks, the ECB probably has one or more rate hikes in store for us this year. The Bank of England will probably continue to increase their key rates. The Bank of Japan recently changed its yield curve control program, becoming a bit less hawkish. But the Fed, with their last rate hike on July 26th, many analysts believe that will be the last one. And there's now just a 30% probability of another rate increase at the upcoming meeting later this year. So I think the Fed is probably concluded their rate hiking cycle with the recent increase of 25 basis points.
Lastly, Alan, copper being one of the industrial metals you watch, what is the technical outlook for the copper market?
Well, currently the technical outlook seems to be bullish with some new highs. In fact, we did see a 3-month high today in copper futures. There was a high at the 401 level hit in May. So I think that resistance will be taken out. Of course, there's a psychological resistance at an even $4. So I could see one more new high, but I think futures will probably hold at a more major resistance at 405 to 406. So look for its continued strength, but the resistance not that much farther, just a little bit higher than where we are currently.
Thanks, guys. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.